Happy Friday, team. I hope everyone had a good Thanksgiving. We are now going to be talking about COSM on a Friday. But what is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a Cosmos Holdings price update. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community and Discord called ARCa. With that said, let's go ahead and dive right into the charts. Okay, so we did face the upside that we were looking for per the last video of analysis, and now we are going to go over what could happen next. Now we are building something very interesting here. I'm going to go ahead and remove the moving averages. Excuse me, just so we can see what we have. Oh, and also don't mind this line right here. This was actually after we made the high from today, we actually one of the members in Discord asked me for a potential exit strategy, and I presented the opportunity to be able to minimize risk. And so I was able to tell them that it looks like the price action was actually going to come back down to the not 618 at about 34.99 before continuing on to the upside. This could have been a good bounce area, and it did happen a little shy of it. But if you watch my videos often, I generally say that when I provide a target, usually the take profit or the realization of that target happens slightly early from it, so if I'm telling you, sell here or whatever, so it'll probably be realized just under this. I did explain in the last video too how we were, how some of us, including I, got a little faked out here by passing the 1.618 on this candle here instead of doing the near the 618 and then retracing. So it actually passed. It. So there's a lot of emotional conflict within COSM. Of course, this is a squeeze. This is what happens. The swings are going to be dangerous and really high. I mean, not even considering the fact that it's an OTC stock too. So we do have to practice risk management. We have to make sure to be patient, and we do have to be smart about this. These are very tough to trade. Okay, so yes, that was what this was for. So now let's go ahead and look at what could potentially be building, because I see here an ascending triangle, and usually ascending triangles from an uptrend usually signal a potential upside, and I will show you what that's looking like thus far. So it looks like we could be doing, if we're doing a wick like a wick to wick basis, like this right here. What I mean by wick to wick is wick here at the bottom and wick here at the top, rather than using the bodies, right? So we can see that the wicks do have uniformity, and they are building this triangle pretty nicely. So now usually ascending triangles do present an upside target, and that price objective is usually acquired by taking a trend line from the top here to the lowest point and applying this to the breakout point. Usually these triangles tend to realize when they're about 70 to 75% complete. And if we put our trend line right over here, we can actually see that it has confluence with the 2.618 at 86.20. 86.20 is pretty important in this aspect, because the 2.618 is absolutely a golden mean or a golden ratio. It does have a psychological component applied to it. The trade usually likes to take it to here. Now, it's not a one shot straight to the top. We have to consider that we have the 1.618 at 60.59, and that 1.618 could potentially be a first stop before us facing a rejection to come back and test our newly converted resistance, which is this, into then a support before a continuation onto the upside, thus realizing our price objective. Now, that's not a guarantee. The thing is that, again, there's a huge psychological factor within COSM because it is a squeeze play. So sometimes the technicals get invalidated quicker, but what we can do best is just follow the geometrical patterns that are happening within the trade. It looks like it is respecting some mathematics within this trade. Okay, so now now that we know the target that we have here, we can also see that we are at the top of this trend. So in my experience, this I mean, we don't have to come all the way down here just yet, but it is a potential likelihood, unless of course like the shorts just start covering whenever, and then it just bypasses the entire process of creating this bullish formation for an upside continuation and just rocket ships from here. So there is that potential too. But if we're following geometry here, this could see another short-term upside to potentially 45, 54. We also have a wick right over here that can present 48 or just about 49 cents before trying to do a retracement back to the 618 at about 35 cents and wicking down to this area just like this wick here. So we'll just wick real fast and recover and then continue on in the pattern before we can break out at about 75%, which would be around here. Okay, so that's usually what happens with this formation. So I can see if we're following just these technicals without applying FOMO and without applying like the covering of short positions like right away in random bursts, we can see this trading range happening for the next 2 sessions, and this can present a lot of emotional catastrophe within the trade. Okay, so now let's go ahead and move on to the next chart, because there is something that I would like to talk to you guys about, because this is I caught this actually in the daily chart, but then I noticed that it was also visible in the 4-hour chart, in which is the one that we're trading. So I'm using the 4-hour chart because the 4-hour chart is a shorter term time frame, and we can see larger movement in smaller spaces. So now, following the golden rule of 3, which is usually something that I speak of within this channel a lot, is the test of the resistance 3 times followed by a capitulation or accumulation of sorts before attempting to break out on test number 4. Usually test number 4 is a true breakout. We did get that. So, and the next thing that I'm going to say is usually not, it doesn't have to, you know what, now that I remember, please just take into account that I'm not a financial advisor. I can't actually suggest for you to buy or sell any stocks or assets. Please take whatever I do show within these videos as a form of entertainment. Do your own DD and we'll be okay. All right. So this doesn't necessarily have to happen every time. In fact, it can be a bear trap. And this is particular to test number 4. So test number 4 breakout happens. This wick is not something that I usually consider as a technical target for me to look at, because this is usually emotion based. So all the emotion here happening, thinking we're going to go to the top, and it presents a lot of liquidity for a short position to be able to be opened here to take it to the downside and test our newly converted resistance into support, because that's usually the rules that these formations play by. Okay, so now we did get a wick all the way down here. We got it all the way to 26, 26, which is around where I was suggesting for people to enter, which was around the 3170 area, per the Discord play. So there is the potential to where this can be that. Now, I mean, if you, I honestly have to say that there are times to where we do wick all the way down here. But if we do wick down here, that'll essentially invalidate our ascending triangle. And the ascending triangle is pretty important. And the lowest target that the triangle can present right now would be at near that entry point that we were talking about, 30, like the 30. Okay, let's just look at it. So 29.68 to about 31.97. So it's going to take us back to that initial entry point. For the longs. So I mean, if it does reach 29 cents, I'm in my personal trade, I'm gonna average down a little more. My lowest entry suggestion was 31.70. Okay, so I just have to warn everyone that there is a potential that we can wick all the way down here before continuing on to the upside. This formation is usually a reversal of trend. and it's a signal for a reversal of trend. So meaning that we fulfill this and we break out on when it's supposed to be broken out per the playbook, and then it continues doing its thing. So now there is a lot of confusion here, because this could very much be that, quote unquote test, even though it was not as low as it should be, which is what I called, if you're looking at the videos, if you're following my videos, I actually called this a bear trap, and it actually was. So, provided liquidity for the longs to continue to the upside. So, please know that there is that risk. Okay, so let's just pull up a simple moving average and see what we have. So oh man, this is looking very good. Okay, so on the 4-hour chart, the SMA 10, which is this green line, the simple moving average, 10-day period, has been used now as a guide to the top since November 17th. And you can see that we're following it, and we're just testing that area. We're testing it. We're not failing it, and still continuing to test it and continuing on to the upside. Another good thing to notice too is that you can see that sell pressure is diminishing. So there are lower ticks of sell pressure, which is good. Okay, and now the buy pressure from down here, you can see that the buy pressure was very minimal, and now we're starting to get an uptick in buy pressure as the sell pressure starts coming down. So that's also a good sign. We can't always trust the volume profile, because volume profile tends to be more random than not. Okay, it's interesting what happens when you present a human to utter randomness. So now within randomness, we can actually find formation. But this is what we're doing now. We can see that we now have a cross of the SMA 10 over the 200-day simple moving average, which is very bullish. And this also can present a form of support. Now, another thing to notice, and just to be able to back the theory of us potentially wicking down to this area, which is not guaranteed, we have the 50-day simple moving average serving as a point of support. So this can actually just move right up to here, and then we can go and bounce right off the 200 and the 50 before continuing on to the upside. So we do have a lot of relevant support down here. Okay, so I'm just giving you a warning that there may be a lot of emotional sentiment happening within the next trading session. So we have to keep an eye out for that. Okay. All right. So now, this blue line is a new addition to our 12-hour RSI profile that we've been looking at for the last few sessions. This now, according to this right over here, is yet another drive of phantom bullish divergence. Sorry, I bumped the mic with my glasses. Okay, so yeah, this is another bullish drive of phantom divergence. So a phantom drive of bullish divergence, which is indicating another potential upside. And I mean, we're just printing over and over different drives of bullish divergence, and it's realizing thus far. And you can also see that we're using the moving average as kind of a guide to the top, and potentially a support area for us to continue to the top. We are in a overbought area, so we do have to watch out. But like I said, we still have space to be able to run up higher. And this is a larger term time frame, so we this can, to reach up to this area can actually be a few sessions or a couple sessions at least. All right, so let's open up a multi-pane. This is going to be the last part of the video, just so we can get a bias for the immediate short-term direction. Okay, so we're going to be looking at let's go ahead and make this a 30-minute. Let's just make sure that's on the buy hourly. This is going to be, we already saw the 12-hour, so we're going to do the 8-hour RSI, and we're going to do the daily RSI here. Okay, so yeah, some things are already popping up that I want to be able to talk to you about. Okay, so the 30-minute immediate short-term time frame is suggesting a downside continuation. Now, you know what? I'm going to pull up that diagram that I have for. Sorry, you guys, that's actually me right there. I'm going to pull up that diagram for you guys so that you can be able to see what my RSI consists of. It's a typical RSI. The only difference is that I just put a bull and bear trend line here on the code, on the script of it. So I scripted this just to be able to have some extra trend lines for me to just look at, based on my my training from a person that a mentor. Okay, so now we're looking at the 30-minute time frame, suggesting a continuation onto the downside. When we are in the shallow areas of in this case, the bull weakness percentile, we can actually be gravitated into the bear weakness percentile. And we have since made a cross below the moving average represented by the pink line, which is actually a little bit of a bearish thing. We are looking at the 30-minute here. Okay, let's keep on moving. So the buy hourly is now suggesting a continuation to the downside from bull strength. It is entering the bull weakness percentile. Okay, now the 8-hour is suggesting a slight continuation onto the upside, but we are starting to make a curvature, and it looks like it may want to take a breather. There's a reason why I'm mentioning all this all at once. Just give it just a sec. Now, this is a very particular one. I want to be able to just verify this real fast. Okay, so yes, this is something that I warned everyone about on a post today on YouTube, on Twitter, and on the Discord members page. So we are approaching an all-time high in the RSI. This is a historical high. So back in it looks like I guess I put 2014 in the post. My apologies. It looks like it's 2013 actually. Back in 2013, the RSI reached this potential level before facing a retracement. We are currently at that percentile now, and this is very likely to present a downside move soon. So this is actually still suggesting an aggressive upside. There's no give in this downside here. So there is still, it looks like we've already surpassed a historical high. So we're at the 83%. We're looking at a red hot zone of about 100% right up here. So we've never touched that in the daily chart for Cosmos. So the higher we go past this historical high, the more likely the downside will come. And that's very much in accordance to what I'm talking about here. We could potentially come back and test this resistance one more time, thus fulfilling the historical high from the RSI before finding a breather, for us to come back and make kind of like a little choppy action here, wick down to this bottom level and continue on our ascent. Okay, so this is the technicals are looking like they are playing according to the historical data that we have available. Okay, so the play is still in play. I see some downside, but I don't see a reversal downside. I see just potential pullbacks, which are natural to price action. Okay, so I think this is a pretty good place for me to leave off the video. If you have any questions or concerns, please don't hesitate to reach out to me on Discord or Twitter. I'll make sure to leave the links in the description below for you to consider joining the ARCa trading community on Discord. But with that said, I wish you a good night, and I will catch you at the bell on Monday. Adios.